Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Dominique Toublan, head of U.S. credit strategy at BNP Paribas, to discuss social secular trends and how that sets up ESG bond issuance. Dominique, it's great to meet with you. Welcome to Trade Talks.
Thank you for having me. Nice to meet you.
All right, and explain to the audience why social secular trends and the democratic sweep sets up a good environment for U.S. dollar ESG issuance. And do you think this is a longer-term trend?
Yes, I think it's a longer-term trend. I think we are set up for a rise in the tide, kind of accelerated by the democratic sweep. So first, what's the tide? We've seen the evolution over the last few years because of new generations that companies and investors are looking to do more ESG. The US is beyond Europe in many ways, but what do we see? We see employers wanting to attract employees that care about ESG. So they care about doing more ESG issuance or projects. On the investor side, the same thing. The new generation is concerned looking at ESG, so that's increasing. So that's a tide we've seen rising. Conversation with investors in the last few years, much more ESG discussion. Now, democratic sweep, the green infrastructure plan that's proposed, that should give a boost to all that.
And the US dollar ESG market is small, but growing fast. How much issuance do you expect in 2021?
So we're expecting $60 billion of issuance for debt that is eligible into the benchmark indices. That means that every regular credit investor is looking at day in and day out. So that would be about 4% of the total issuance this year of what we expect. And that would almost double what is now available in the benchmark indices for investors. So going from about 1% of the index to 2% of the index.
Dominique, which sectors are most likely to issue the most ESG bonds if the US market evolves like the European market has?
So in Europe, there are really two sectors that dominate the issuance. It's banks, first and foremost, and then utilities. Utilities, easy to understand, green projects, renewable energy projects. That's what goes here. If you look at the US, that's also true. So far, even if it's smaller, banks and utilities dominate the ESG market.
And where could there be some special situations?
So some of the situations are just because of the timing of what's happening. I think telecoms with the 5G, capex that's going to be needed to finance the 5G. So a lot of this will be, generally speaking, funded by ESG bonds, but also because of the democratic sweep and the green infrastructure plan. Think the auto sector with EVs, for instance. A lot of that is likely to be financed by ESG bonds as well.
And finally, do ESG bonds trade different than regular bonds?
Actually, they do. And it's favorable for both issuers and investors at the same time. How is that possible? So first, when an issuer issues a green bond, it's actually cheaper for them to issue than a vanilla bond, if you want to call it like that. The new issue concession, I would call it, is not as big. And then if you look at the secondary market, what do you see? You see these bonds trading tighter, outperforming the vanilla bonds. So they come a little bit richer to start with, but then they outperform even more. When we try to compare, same bonds, same maturity date, same issuer, it's 2 to 6 basis points on average in investment grade. That's the gap, how much ESG bonds are outperforming versus non-ESG bonds. So some of it is because of there is demand for it, and there's a little bit of scarcity, as we discussed, right? Only 4% of the total issuance, so that helps these bonds performing better.
All right, Dominique, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.